Okay, guys, real quick, this is Chris with investingwithchris.com and also investingondemand.com. I wanted to make a quick video for you to show basically the ETF world, the electronic traded funds. And this is something I feel that every investor, or at least, matter of fact, I'm going to back up. I am going to say every investor, but also for those especially being new into stock markets or the stock market trading world, you probably want to look into buying a few ETFs. This is going to beta weight or at least balance your portfolio for any downtrends. And there's also other moves like buying puts and whatnot, but I won't get into that. Buying ETFs is a good way that are basically managed by other portfolio managers, and they are an index full of funds or a handful of funds from various different businesses or stocks into one. Like Google, Amazon, Facebook may be in an ETF, and someone like Vanguard or Schwab may actually manage that. And what happens is when those perform good or better than the market or whatever, they're going to go up, and therefore you can safely see anywhere from 2 to 10% returns a year. And yes, this is a good way to at least make some kind of money, less stress. And I'm going to show you a couple screenshots and web browsers that I want to basically outline what ETFs are and get you to better understand what those are. So with that being said, I'm going to take a look over at the Wikipedia. And basically an ETF is a exchange traded fund. It is an investment fund traded on stock exchanges, much like stocks. An ETF holds assets such as stocks, commodities, or bonds, and generally operates with an arbitrage mechanism designed to keep it trading close to its net asset value. Although deviations can occasionally occur, most ETFs track an index such as the stock index or bond index. ETFs may be attractive as investments because of their low cost, tax efficiency, and stock-like features. Okay, so the structure, it's typically a type of fund. It owns its assets, bonds, stocks, gold bars, etc., and divides ownership of itself actually into shares that are held by the shareholders, you and I. The details of this structure, such as a corporation or trust, will vary by country, and even within one country, there may be multiple possible structures. You can take a look at this more in the Wikipedia website. Google ETFs, electronic traded funds. You have index, stock ETFs, bond ETFs, commodities, currency ETFs, and et cetera, actively exchange traded grantor trust, inverse ETFs, leveraged ETFs, and so on and so on. Sometimes these do have a cost because they are managed by someone else other than yourself. But basically you can get into them for less than 1% to 3%. Also check with your brokerage. I'm into a couple. And I just want to say that you can also get with discount brokers, which actually charge 0% commission fee. The taxation is much more attractive than mutual funds. In the U.S., whenever a mutual fund realizes a capital gain that is not balanced by a realized loss, the mutual fund must distribute the capital gains to its shareholders. This can happen whenever the mutual fund sells portfolio securities, whether to reallocate its investments or to fund shareholder redemptions. Trading, an important benefit of the ETF is the stock-like features offered. A mutual fund is bought and sold at the end of the day's trading, whereas ETFs can be traded whenever the market is open. Since ETFs trade on the market, investors can carry out some of the types of trades that they can with a stock. For instance, investors can sell short, use a limit order, use a stop loss order, buy on margin, and invest as much or as little money as they wish. There's no minimum investment requirement. Again, this is a good reason why new beginners or new traders and investors should be looking at ETFs. Also, many ETFs have the capability for options, puts, and calls to be written against them. Covered call strategies allow investors and traders to potentially increase their returns on their ETF purchases by collecting premiums. Again, remember, I did write an article or a few over at the investingwithchris.com website to explain what call selling is. covered call writing, et cetera, et cetera. The proceeds of a call, sell, or write on calls written against them. Mutual funds do not offer those features. So you can read a lot more about this right here. And then Investopedia is another resource to look at. There are, again, variety of ETFs, over 1,800 to choose from. ETFs are liquidity. The fact that most ETFs are very liquid, can be traded throughout the day is a major advantage over index mutual funds, which are priced only at the end of the business day. This becomes especially critical differentiating factor for the young investor who may want to exit a losing investment immediately in order to preserve limited capital. Ample liquidity also means that investors have the ability to use ETF shares for intraday trading similar to stocks. There's low fees in the ETFs. Keeping up with trends ETFs. There's a lot here just simply about ETFs. But let's take a look at the quarterly ETF share price and how they've risen over basically since the last 10 years and how they've outperformed the stock market index or stocks themselves. You have a few like IW, the SPY, which is one of my favorites, the IVV, Vanguard, OO. And as you can see, the really only losing is gold. Wow, let's take a look at that. The gold ETF, or the ETF, and there's another one here, GDX. Wow, these are actually underperforming in the last 10-year trend. What's this? Just think about that. So as you can see, there's a lot of disadvantages and advantages to owning an ETF. The pros: access to many stocks across various industries, the low expense ratios and fewer broker commissions, risk management through diversification, and ETFs exist that focus on targeted industries. Now the cons: they're actively managed ETFs have higher fees, single industry focus ETFs limit diversification, and the lack of liquidity hinders transactions. And that's just because stocks like Apple, they have millions of volume trading a day, and you're more than likely to get in and out of those. ETFs are a little bit different because they are less liquid for the fact that there's less investors selling them throughout the intraday. However, it is mentioned above that they can be traded intraday, but a lot of people hold on these long term, just kind of balance out that portfolio. So active and passive equity funds, you have index stock ETFs, dividends, ETFs and the taxes, and then ETFs market impact. Okay, that's another resource here on the Investopedia website. And then one of my favorite websites to go to is simply ETF.com. You'll find the ETF tools and data, and then ETF fund flows. It's going to show you the top 10, the best, and what looks like the redemptions, a little bit less performing with their net flows. And up here, the Gold Trust is obviously trading better than it did this last month. The HYJ, the JNK, the iShares short-term corporate bonds, Vanguard, total bond market, et cetera, et cetera. They're all performing a little bit decent here. Now, the top one, or the top 10 that are a little bit down, as you can see, are over here. And basically, there's a whole website devoted just for you and ETF investing at, again, ETF.com. You can go to ETF channels and find the energy stocks or energy index ETFs, the biotech, the bonds, the gold, et cetera, et cetera. As always, if you have any questions, always reach out. You can find me on investingwithchris.com, and also the new platform that will be coming out that this will primarily be on is the investingondemand.com. Now, for $1, we'll get you all the access, just like the Investors Club access, without the access to Investing on Demand. Now, I've made the platform only $1 for the fact that I see that there is a price within that, and that will be for those who are actually willing to pay for that. They're going to take it serious. If it's free, more than likely you won't come on the website ever again. So the $1 meaning that you know in the back of your mind you're paying for it and you'll want to come back. So as always, this is Chris. Happy trading, and until next time, see you.